Looking at buying a car on finance? Well, in this video I'm going to be explaining the different types of car finance and the pros and cons of each one. Don't go anywhere. What's going on guys, Will here, and today we're back with a brand new video. I hope you guys are all very well, and today we've got something slightly different in store. We've got a bit of an explanation video because I've seen everywhere recently that people are struggling with the different types of car finances. So I thought today we'd do a video about it. Yeah, that's right. So today we're going to be going through the main different types of car finance and the alternatives there are to car financing out there. So I notice people talking about the big two that I can think of, but there are other options out there. So I thought I'd make a video of the pros and cons of each variation and how it could benefit you to go with something slightly different than what you may have heard of from a mate or from a car dealership. As always guys, if you do enjoy the video, please remember to leave a like down below. It lets me know and the YouTube algorithm know that you are enjoying my content. Also leave a comment on your thoughts on the finances down below. Which one do you think is the better option? Also remember to hit that subscribe button, that way you can stay tuned with all my future content, and why not ding dong that notification bell as well, and that way you'll get a notification every time I upload. We've got a few different types of videos coming shortly. We've got more content like this, more vlogs coming, more car stuff coming, and we are doing some more stuff to the car, so stay tuned for that. Hit the subscribe button and then you can watch that as well. And if you feel like it, why not give my Instagram a follow? I'm being more active on there recently, so I'll leave it on the banner down below and also in the description. Enjoy the video. So to start off this video, we're going to start with the most common car finance, and that is of course your PCP agreement. Now PCP stands for personal contract purchase, and what this basically means is that you can purchase a car without paying the full amount straight away. So with PCP, this is the most commonly used form of finance. So what you get with this one is smaller monthly payments. However, at the end of your contract, there will be a balloon payment. So with PCP, this is how you break it down. You'll put a deposit down. So let's say we put a £2,000 deposit down. You'll then pay a monthly fee throughout the contract, which usually would be 4 or 5 years. And at the end of the contract, you'll have to pay a balloon payment. So for example, you could put £2,000 down, pay £250 a month for those 5 years. And then in order to keep the car at the end, you would need to pay the rest of the fee off, which would usually be a balloon payment, would say, I don't know, around £5,000–6,000. Now these are the most common ones, like I said, because the monthly fee is lower than some of the other examples we'll look at in a moment. And of course you get to keep the car at the end of it, and that's a big kicker. Some of these examples you don't get to keep the car. So with PCP, as long as you keep up with your payments and as long as you pay everything off at the end, you get to keep the car. But here's the kicker of PCP. If you put that deposit down and then you pay all the monthly fees and you choose not to pay the balloon payment at the end, the car won't be yours. You'll have to give the car back to either the finance company or the dealership you bought it from, and then they'll be able to sell it as a sort of used car. Now the second most common type of a finance agreement would be your hire purchase or HP agreement. This is one that I've personally done in the past, and I think it's much better than PCP, but obviously it's just down to personal preference. So what's the difference between hire purchase and PCP? Now, they're both fairly similar. Both of those, you put a deposit down. Both of those, you get to keep the car at the end. Both of those, you'll pay a monthly figure on an agreed term. So, £250 over 5 years. So, what are the differences? So, with the hire purchase, you don't have that balloon payment at the end. Now, this in turn does change a few things. What it changes is that your monthly payments will be a lot higher than if you've done a PCP contract. So with hire purchase, you'll still put the deposit down. So using the example we done earlier, you done £2,000 deposit. Your monthly payments will be higher. By the end of the final payment, it won't be a balloon payment. What it will be is just the same figure as what you've been paid out through the contract. So for instance, you'd put a £2,000 deposit down, maybe pay slightly higher. I haven't done the calculations, so say £350 a month rather than £250, but then you wouldn't have that 6k figure at the end of it. Now, of course, this is why it is not as popular as the PCP agreement, because the monthly payments are a lot higher in contrast for the same vehicle. and obviously people in their earnings and stuff, they don't want to be forking out their money each month for 5 years of having, you know, £100 extra a month for the same car. So they are the two main types of finance in cars. So both of these, you get to keep the car at the end of it. Both of these, you put a deposit down. And both of these, you pay a monthly figure until the end of your contract. So what are the other ways that you can do? Now, believe it or not, there are other options that you can consider which could suit your needs more than a PCP or a HP agreement. So what we'll do now is we'll go through 3 other ways of which I've identified on how you can have a car, but you won't have to do the high monthly payments or deposit or balloon payment. You'll have to do at least one of those, but not all at once. So the first one we'll look at is, of course, the bank loan. Now, this is something that has become more and more popular over the last few years. And to be fair, the bank loan does come with some really good benefits. So you've already got the £2,000, which means you'd only need to get a bank loan for the £8,000. And what this means is now you've got your combined £10,000, you can then go to the dealership and buy the car outright. This also means you could also buy a car privately without having to worry about if they accept finance or not. So the bank loan seems pretty preferable, considering the fact that you own the car straight away and you don't have to worry about a balloon payment at the end. And also combine that with the fact that you can go to a private dealer rather than just a dealership which offers finance. Seems like a good option. See, the banks have also cottoned on to this. They've cottoned on that people will take out the bank loan in order to fund their new car. So what you'll also find is that the interest rates that they're offering and the APR rates are sometimes a lot lower than what the finance companies are offering. So this has become more and more common, and also it's ideal. I definitely am a big fan of the bank loan and using that to fund your car. So PCP is my least favorite out of the 3. That's just my personal preference because I wouldn't want that balloon payment at the end. Hire purchase and bank loan both have their pros and cons, down to you to decide which one you'd prefer. But there are other ways of obtaining a car if your circumstances are slightly different. For instance, there are people out there that don't like to stick with the same car for too long. They get bored, they want something new, and what's the point in owning a car if you're just going to get rid of it in like a year's time, 2 years time? Cars depreciate in value so much, and there really isn't any point in owning the car if you're only intended on keeping it for a couple of years. So what option is there out there for you? Now, you see, it depends how long you're intending on keeping the car. The most common one for someone that doesn't want to own a car but just wants the car for like a 6-12 month period would be your leasehold agreement. Now what this is you would never own the car. You would lease the car from, say, BMW or a lease company, and you would have that car for the agreed time, and then once that agreement is over, you would hand the car back. So you're not owning the car, you're paying to use the car. And what this means is after 6 months, if you don't like the car, you can just go to a different company and get a brand new car. We see this commonly with like the new plates. So we're currently in 2021. People that want the 21 plate cars will lease it for a year, and then when the 22 plate cars come out, they'll get a 22 plate so they can stay up to date with the modern trends and everything. So with a leasehold, you have your monthly fixed fee, you don't own the car, you give it back after your agreement, and then you can choose another car to use. So you can see why that option's pretty favourable. So what is the final thing which I've identified? Now the final thing I've identified may be slightly off topic, but it is a way of obtaining a car without putting down or buying a car straight away. And the final thing I've identified is renting a car. Now this is by far the most expensive option because you don't own the car and it's a short-term agreement. So all the other agreements that we've spoke about are long-term agreements. This is a short-term one. So this will be, say, if you need a car for a couple of weeks, a month, or etc., you would pay to use that car services for that set period of time, but it is a lot more expensive than, say, a leasehold or a finance agreement. So you may be wondering, why would someone pay that much money to rent a car when you've got the other options available? Now, look, again, it's down to circumstances. So say if you're someone that travels from country to country every couple of months, you might not need a car because you might not be in the country for 6 months of the year. So you might just rent the car for if and when you're in the UK. And this is why it's so great that we've got so many options out there. And I hope this video has explained to you a little bit more about the different types of car finance. If you're worried that something could happen to the car after you've, say, just taken out that big old loan, there is a thing called gap insurance. So with my one, I'm not too sure if it affects all of the options that I've mentioned, but I know for PCP and for hire purchase, you do have the option of gap insurance. And what gap insurance is that, say you've paid off a certain amount of the car and you've got, say, 6 grand left to pay off and someone crashes into you, your insurance are only going to pay out what your car's worth, right? So you might have to use that money to pay off the rest of the car, and then you've only got 6 grand left. What gap insurance does is it covers the difference of what you've still got to pay off. So it's a very small monthly fee that you would pay, and if anything happens to your car where it's written off or whatever, that gap insurance would cover the gap which you haven't paid yet, and then your insurance money can go towards a new car. I hope that makes sense. If you do have any questions on gap insurance or want me to make a video on it, please let me know, leave it down below, and I'll definitely do that. Personally, I've never had an issue with financing my car. As long as you stay up to date with your payments, you put down a fairly decent deposit, you'll be laughing and you'll be sweet. I personally never missed a payment, never had any issues, never been contacted or anything. It's just all been plain sailing for me, so touch wood, that carries on. So yeah, if it is an option that you are looking at, definitely would recommend it. There's no harm in trying and seeing if you enjoy it. Some people prefer to buy their cars, like I say, some people prefer the different options. It's just personally down to personal preference. So I hope this video has explained to you the different types of car finances out there and the different options you have if you're looking to get a car but you can't pay for the full amount straight away, or if your circumstances just don't warrant you to buy the car outright. Hopefully you've taken some of the pros and cons and it's helped you to make your decision. If you have any questions on anything that I've mentioned, please leave those in the comments below. I'll get back to every single one of you and I'll answer as many comments as I can. If I don't know the answer, I'll try and find out for you guys. So guys, that will be the end of the car finance video. It's a short one, but hopefully it's been very informative for you guys to make a decision. I've been Will. If you did enjoy the video, please remember to leave a like down below, comment your thoughts, and hit that subscribe button for more content. Remember to ding dong that notification bell as well to stay tuned for every upload. You'll get a notification whenever I post. Why not follow my Instagram as well? Like I said, I'll leave it on a banner now and I'll also leave it in the description. Let me know what you guys want to see from this channel in the comments down below. I'll try to accommodate as many of you as possible. We've got a couple more of these sit down videos coming shortly. Like I said before, we've also got a couple of car videos coming up soon. I also want to get in the driver's seat of a few of my friends' cars, so we'll see how that goes. But yeah, for this week, that will be the end of the video. Hope you guys have an amazing week, and I'll see you guys next time. I've been Will. Peace.